We had David Rosenberg on at the top of the show.
Okay.
Skeptical.
That is skeptical is a good way to describe him. I pointed out some research from Goldman Sachs that showed that after we have gotten historically 5% drawdowns in the S&P 500, it tends to be higher.
He loved that data.
He was
really.
not. This is the chart showing that on the mean and median basis. It's been higher in the periods following. He was not a fan of that historical analogy. No. But you've been at this a long time. Like, how should investors be viewing this period?
First of all, just because something tends to happen doesn't mean it will.
Fair.
So I was in the subway. I didn't get to hear that part of the discussion.
All good.
But knowing his history, I'm sure I can figure out, I think I can read between the lines. But just, we've all been conditioned to buy dips. It does tend to work, but not every dip ultimately proves to be the buying opportunity. And that's really where it comes down. That's why I'm still looking to see if the carry trade has more to go. And one of the things I've been watching is the Japanese Topix bank index, which has underperformed the Nikkei. It was down double digits both days. And then yesterday when Nikkei was up 10%, it was up 4%. So I still think that if the Japanese are worried about their banks, maybe there's something out there. So there's a push-pull. Yes, stocks tend to go up. And we do tend, and as a result, dips tend to be good buying opportunities. But they're not 100%. And for people who are just sort of like looking at their 401k, I got a lot of messages from friends, who are not in the markets. What do I do? I'm like, just right now, nothing.
Well, right, because there's a difference between making the decision to buy into it and making the decision to sell it, right?
Yes, exactly.
But there is that third choice, which is don't do anything.
Stay the course for, if we don't know, stay the course. My first piece of advice always is, if a day like yesterday freaks you out, you're carrying too much risk. Okay, so that's my first order of business. If you were flipping out yesterday, or God forbid you got margin calls or something, you may want to be taking a bit less risk in things. That's probably your tell. If it's like, okay, let me just put this in perspective. We're still up 9% year to date. We still haven't had a full correction in the S&P 500. Yes, the NDX has, but the S&P 500 hasn't. We've given back our gains since like the end of May. So let's take a deep breath. If this, this doesn't mean go all in because we fell. Because I think we did fall for some pretty good reasons, and it's not clear those reasons are behind us. But if you've been doing okay and you weren't really flipped out by what happened yesterday, it was more of a curiosity, then take your time. Breathe.
Breathe. Just breathe.
I like that.
Yeah, that's good. Good advice, Steve. As always, thank you for joining the show.
My pleasure,
Love
Josh.
having
My
you,
pleasure,
Steve.
Julie.